Welcome to Kharoo channel. We are solving the exercises of depreciation chapter, and in this video we are going to solve a practical problem 4 on page number 245, that is an SLM method sum. Let's quickly go through the sum. Question 4. On 1st January 2015, Triveni Traders Raigad purchased a plant for rupees 12,000 and installation charges being rupees 3,000. So on 1st 2015, we have purchased plant 1 for 12,000 plus 3,000. We know we add all the incidental charges like installation charges that were required for an asset to bring in its working condition. We add it to the cost of asset. So here we are adding this 3,000 to the cost of plant 1. Then on 1st July 2016, another plant was purchased for rupees 25,000. 1st July 16, plant 2 was purchased for 25,000. And on 1st April 17, another plant was purchased for rupees 27,000. Wages paid for installation amounted to rupees 2,000 and carriage paid for the plant amounted to rupees 1,000. So here we have two other incidental charges that we will add to the cost of asset. The date is 1st April 17, plant 3, 27,000 plus 2,000 installation charges plus 1,000 carriage charges, carriage paid. So these expenses will be added to the cost of asset. 3,000 will be accounted with this amount, that is in the cost of plant 1 machinery. This 2,000 and 1,000 in cost of plant 3. Next, show plant account up to 31st March 2018, assuming that the rate of depreciation is 10% per annum on straight line method. So SLM method at the rate 10%. And they want just plant account. No depreciation account or no journal entries is required in the sum. So this will be financial year 14-15, no other entry in first year. Second year will be financial year 15-16, but again this is after this year. So this is financial year 16-17. So in financial year 15-16 there are no entries. In 16-17 we have purchased plant 2, and in financial year 17-18 we have purchased plant 3, and we want plant account posting up to 31st March, so up to this year. So with this summary, let's do the working note 1, calculation of depreciation. This is as per SLM method at the rate 10%. Particulars, and we have purchased 3 plants, right? Plant 1, plant 2 and plant 3. Last column will be total depreciation. Then we will have purchase date and purchase amount. The date is 1st Jan 2015, 1st July 16 and 1st April 17. Amount is, first machinery is 12,000 plus 3,000 will be 15,000. Second machinery is 25,000 and third machinery is 27 plus 2 plus 1, 30,000. And we have to do the working for 4 years. Financial year 14-15, 15-16, there is, in 15-16 there are no purchase or sale transaction. 16-17 and 17-18, right, for 4 years. We can do the working year less depreciation for FY 14-15. We will keep one line for working if needed. Then we will get WDV as on 31st March 2015 at the end of first year. Then we will deduct depreciation for financial year 15-16, one line for working, then WDV for 31/3/16. Then depreciation for financial year 16-17, one line for working, WDV as on 31/3/16. 17. And then last year depreciation for financial year 17-18, one line for working, and this will be WDV as on 31st March 2018. That is what the question requires for 4 years. As in this question, we only have 3 purchases and no sales. We can directly start our depreciation working. Just remember we have to do the working in the year of purchase only, right? First machine was purchased on 1st Jan 2015. So the asset was in the business for Jan, Feb, March, 3 months only. So the working will be 15,000 into 10% into 3 divided by 12. Second and third machines were not there in business in first year. In 15-16 also, second and third machines were not there. But first plant was used for whole year. So the depreciation amount will be 15,000 into 10%, that is 1,500. And since there are no sale transaction, the amount will be same for next 2 years, 1,500, 1,500. For second plant, the plant was purchased on 1st July 16, that is in financial year 16-17. So in this year, we will have working 25,000 into 10% into how many months the asset was in business from July. So July, August, September, October, November, December, Jan, Feb, March. That is for 9 months. 9 divided by 12. Next year, 25,000 into 10% is 2,500. The asset was used for whole year in next year. And third asset was not there in third year. It was purchased in fourth year, that is last year. So we won't have any opening balance of plant third in fourth year this year. So it was purchased on 1st April 2017, that is 17-18 as financial year. As it was purchased on first day of the financial year, it was used for the entire year. So the depreciation working will not be there. The 10% depreciation will be on 30,000, that is 30,000 into 10%. So that will be 3,000. So now we can work out on calculator. 15,000 into 10 divided by 100 into 3 months divided by 12 months, right? So the first amount will be 375 depreciation amount, and 375 minus 15,000, the WDV will be 14,625. 14,625. From that amount, we are going to reduce 1,500. The amount is 13,125. From this amount, again reduce 1,500. That will be 11,625. Again 1,500. The amount is 10,125. So plant 1 working is done. Now plant 2, first and second year it wasn't there. In third year it was purchased. 25,000 into 10% is 2,500. And for 9 months into 9 divided by 12. The amount is 1875. 1875. That will reduce from 25,000, 23,125. And next year again 2,500 is reduced. You will get 20,625. So plant 2 working is also done. Now plant 3. 30,000 minus 3,000 is 27,000 in the last year, fourth year. So we have all the amounts. Now we can do the totals. First year the depreciation amount is 375. Second year it is 1,500. Third year it is 1,500, 3,000, 3,375. And fourth year 1,000, 2,000, 3,000, 4,000, 7,000. Okay, so these are the depreciation amount. So let's do the WDV working. 14,625, 13,125. Third year WDV will be 11,625 plus 23,125. That is 34,750. And last year, that is fourth year, 10,125 plus 2625 plus 27. The amount is 57,750. So this is the only working note required. Now we can open the ledger plant account. This is the simplest sum, I guess. No sale entries are there, so plant account, no journal entries, only plant account is required for 4 years. So in first year is 2014-15. In that, first transaction was on 1st Jan 2015. 2015 Jan 1, 15,000 asset was purchased. Plant account debit to bank account. We paid through bank. 15,000. No other entry during financial year 14-15. So we will pass the depreciation entry at the end of the year. 2015 March 31. That will be by depreciation account to plant account. So this amount is 375, right? 375. Then we can close the books in this year. 15,000, 15,000. On last day we will close. We will do the balancing by balance close down. The amount is 15,000 minus 375. We have this amount 14,625. 14,625. 14,625 will be carried forward on next day, 2015 April 1. To balance brought down. In financial year 2015-16, there are no other entries, only one depreciation entry at the year end, that is 1500. So we'll pass the depreciation entry 2016 March 31 by depreciation account 1500. And as there are no other entries, we'll close the books 14,625, 14,625. From 14,625, if we reduce 15,000, we'll get 13,125. So the balance amount is by balance close down 13,125, and next day we will carry that amount forward. April 1 to balance brought down 13,125. In third year, we have purchased plant 2. So for 25,000, we'll pass the entry. The date is July 1st. July 1st to bank account. We paid through bank 25,000. When asset is purchased, the value increases, so we debit. And when asset is sold or when depreciation is charged, the value of machinery is reducing, so we credit. These are the basics. So we debit the plant account to bank account and credit the bank account. So after this, we have one depreciation entry. In third year, we have these depreciation entries, and the total we have 3,375. So depreciation entry at the year end 2017 March 31 by depreciation account 3,375. All the entries are done. Now we can close the books. The total is 125, 8 and 3, 38,125. 38,125, 13,125 plus 25,000 minus 3,375. We'll get the balancing amount 34,750. 34,750. So at the year end, we'll get a balancing figure by balance close down 34,750, and we'll carry this amount forward 2017 April 1 to balance brought down. We had this amount here also 34,750. And then in the last year, we have purchased another plant on 1st April 2017 for 30,000. So the entry will be on same day, 1st April 2017 to bank account. We have assumed that we have paid through bank. The amount is 30,000. There are no other entries other than depreciation. So on the last day, We will pass these depreciation entry. We have the total here 7,000. 2018 March 31 by depreciation account 7,000. So 34,750 plus 30,000 is 64,750. Closing the books. 64,750. From 64,750 minus 7,000 will get 57,750, and this amount matches with this amount. So that means our working and posting are correct. So on last date, balancing amount by balance close down, we will carry this amount forward next year 2018 April 1 to balance brought down 57,750. This is the easiest sum of the exercise, I guess. So what we have done in this sum? In this sum we started with working note 1, and there are 3 purchases only in this sum. No sale, so there is no profit or loss on sale of assets working. After this we opened plant account and passed journal entries and did the posting for 4 years. The final amount, balance amount, matched with our working. That's it. So this is the depreciation sum as per SLM method and practical problem 4 from your exercise. If you find this video useful, please like the video, share it with your friends and subscribe for future notifications.